Hello everybody and welcome to this week's Motor Trade Radio podcast powered by eBay Motors Group. It is Saturday the 2nd of July and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 34, season 8 of Motor Trade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
Couple of big shout outs this week, Curtis. So the first one is that we had a fantastic interview with Devon Martin, who's Cap HPI's Director of Valuations. And during the podcast that we issued on Tuesday morning of this week, was talking obviously about the June used trade value performance and basically values by market segment and fuel type and his view on what's likely to happen over the coming weeks. And we have the full podcast still available on your podcast feed, as Curtis has said there, but we're going to start off today with playing a clip shortly so you can sort of get a flavour of what Darren's talking about. But that was a great interview with Darren, wasn't it? Particularly sort of talking through some of the nuances that seem to be appearing in the market at the minute.
Yeah, definitely. Lots going on. And he did have a lot of interesting things to say about the ebbs and flows of supply and demand at the moment. So do catch the full interview. But it's been a busy week at Motor Trade Radio, hasn't it? Because that was one of our bonus episodes. And only Thursday morning, we released the second one, which was a exclusive podcast interview with Robert Forrester, CEO of Virtue Motors. And Robert came on to the podcast to clarify some of those media reports about shareholder unrest, which we covered only last weekend on the podcast. But it actually turned into a wider chat about market activity in the year to date. He gave us an update on his views on new and used supply trends. He talked about acquisitions and lots more. So it's a fascinating interview, and what we've done is we've added it to the end of this show. So although it's in your podcast feed as a standalone episode, if you haven't heard it yet, then stay to the end because you can hear the full interview.
Yeah, and if anybody's ever listened to one of the podcasts, and I hope you might be tuning in this morning, that's always a great interview with Robert. Very open, very transparent and honest there. And as Curtis has said, they're talking about many things in the market. So I think there was probably interest for everybody, whether that's EV, consumer demand and activity, views on the future around EV, new and used supply levels, valuations, etc. I think we had everything on this interview, didn't we, this week?
Yeah, there was a bit about Brexit as well.
Yeah, we got a little political, a little bit, not too much.
Yeah, the cost of living crisis, which Robert redubbed the cost of lockdown crisis. So, yeah, I mean, plenty of food for thought there. So, do stick around for that interview. And also, if you'd like to get in touch with us, come on the show or send us a press release, then just email us at motortraderadio@yahoo.com. You can also join the Motor Trade Radio LinkedIn group or follow us on Twitter.
And although we have got, a packed show with the snippet from Darren there and the interview there with Robert, we have got a few headlines that have hit this week, aren't there, that are very interesting as well.
Yes, headlines this week are from AM, Car Dealer and Reuters. And the headlines are, Looker's trading statement shows strong start to 2022, but warns of challenges later this year. Pendragon launches car store used car sites at Morrison's and Homebase stores. Truss Ford signals Scotland shift with Aberdeen car dealership application. And we've got the return of Dieselgate, Phil.
Yes, it's back. Yeah.
Yep. As authorities in Germany raid Hyundai and Kia over suspected defeat devices.
As we mentioned there, we're going to go first to the interview there with Cap HPI's Devon Martin that, as we said, was earlier on in the week. where, as I say, he gave his sneak preview of the latest editorial highlights and the used car trade price trends over the course of June. So we'll just give you a little bit of a snippet to a couple of the responses to the questions on that interview now.
Can you bring us up to date with that headline 3-year 60,000 mile figure for June, and also maybe give us a bit of context about how that compares with previous Junes?
So the drop at 3 years is 0.9%, which is about £120 on average. Obviously, there's lots of moving parts within that, as we always say, some ups and some downs. But yeah, 0.9% is generally stronger than most Junes. If you look back over the last probably 10 years, 1.4% movement is quite common. We obviously had last year that skewed the figures considerably when we were in our summer of strength, as we called it, with values going up dramatically. I think it was sort of nearly 5% this time last year in the other direction. So yeah, 0.9% at 3 years. So that is a fairly strong position for June. Obviously, there's different reasons for that this time around, though. But yeah, it's 0.9%.
And as you say there, I mean, it's the fifth sort of drop consecutively this year, but actually we haven't seen an increase this year, have we? We saw a level book in February, and then obviously we saw the 2 months of April and May down 2.1%. And I think we had a chat recently, didn't we, when we were talking about partway through the month around the sort of the direction. But I mean, what's your view on what the conditions are that's driving this now, what we're describing as a plateauing effect of the market?
Well, it's very much down to supply and demand, which the market always is. But we're in that unusual, almost unprecedented situation where we can't remember it previously, where you've got low demand and low supply. I guess it's the supply side of that is the unusual, because pre-COVID there are obviously plenty of registrations going on, lots of used cars being generated, particularly in the sort of the fleet and leasing area. But we've got low supply because of the new car issues with semiconductors and other component shortages. So with demand being low, they're actually fairly well matched at the moment. So demand is not disastrous, but it is lower than many have budgeted for and were hoping for. And so the dealers are not out there in huge numbers buying lots of cars. They're kind of picking off vehicles that they need rather than stocking up dramatically. So what that kind of with those low supply levels, though, that is kind of enough just to keep values sort of ticking over. And it's important to remember that values do tend to come down as vehicles age in their life cycle. Generally, values come down. What we've seen over 2020 and 21 is unusual. So this is a more normal occurrence, and actually on the strong side of normal with that 0.9% drop.
And just as you alluded to earlier about, obviously this is a headline figure. I mean, is the ignoring the sort of the last 2 years of sort of unseasonal changes, but in terms of the complexity of the values moving behind this headline figure, is it becoming a little bit more complex in terms of what is moving up and down and the amount that they're moving up and down compared to what normally would have happened?
Yeah, it definitely is complex. We've got a team of 6 editors that are poring over this data all the time, and you've got lots of things within that where you've got values that are moving up, but it is generally generated by supply and demand. And when you do get sort of a few of certain types of vehicles, so think about that sort of maybe medium SUV segment where you get quite a few vehicles coming in similar specs and trims and colours and that type of thing, then you can have an effect on values that way. So that's the kind of level of detail that you have to look into. You have to look at the retail market as well as the trade market. And obviously we're looking at all sorts of different dynamics with there. And then when the figures are produced, you get a real pattern showing with sort of different fuel types, different sectors. So at the moment, convertibles are generally quite strong. They've gone up 0.7%. SUVs are the sector that's moved down the most, particularly sort of medium SUVs that have come down 1.3%. So lots of moving parts within that, but it is generally supply and demand, which impacts that on a broad scale.
Well, some great insights there from Darren, as ever. And that really does bring us up to speed with how June panned out. So, we're looking at 0.9%, which, as Darren says, is very much in line with this plateauing that we're seeing in terms of trade values.
Yeah, and a little bit of the sort of reassurance maybe for the next few months or even weeks and days, as you put it, in terms of the speed in which things are moving. But that he's not expecting the market to crash anytime soon, and he's expecting this sort of plateauing, as he described, to happen for some time yet. So always, worth an interview there. We're listening to Darren and very open in terms of his views on the market, but highlighting, there's a lot happening out there at the minute.
Yeah, and if you tune into the full interview, which is on your podcast feed, you'll be able to find out how the Motor Trade Radio Saphira is doing.
Yes, the famous Saphira. So we're going to go over to Car Dealer for the first of this week's headlines, and this is with Lookers makes strong start to 2022, but does warn of challenges later this year. Now, interesting with this one, if you listen to the interview with Robert Forrester at the end of today's show, or you listen to it earlier on the week on Thursday morning when we released it, kind of similar view coming from Robert there, that there is an expectation that H2 of this year could be still a bit of a challenge, and it may not be till sort of H1 of next year that we see kind of a significant recovery to supply.
Yeah, and I think we're going to see similar statements from a lot of the other dealer groups because, as Robert pointed out in his interview, and I know we keep referring to the interview, but he does point out that last year was a record year for most dealers, and we're now seeing a return to some sort of normality. So within the Lookers story, it's a H1 update. So the group says that it's trading ahead of expectations and that underlying profit before tax for H1 should top £45 million. So that will be down from 50.3 million achieved in the same period last year. And it does go on to talk about new, used, and after sales across the business. And the part that really caught my eye was this warning from the board about 2022, in terms of the results will be substantially H1 weighted for the full year. So they're clear indication there of the strength of H1 in relation to H2 expectations.
Yeah, I mean, it is great to see the recovery of Lookers, because they did go through a period of challenges, didn't they, as we talked about many times on the podcast. But again, there's cited in there, as you say, Curtis, that the new car market, 8.7% fall, but had outperformed the market in the brands it represented. And they do obviously say that used car volumes declined by 8.1%, but the margins for both new and used held firm due to the obviously supply shortages. But again, with Mark Rayban there saying that following the record year in 2021, we have maintained strong trading momentum whilst continuing to make progress with our key strategy initiatives. And to be fair, it seems to be working out on the face of it, doesn't it, with work that they are putting into these sort of the strategies and initiatives that they're now focusing on.
Yeah, definitely. And staying with the listed groups, AM Online's headline is Pendragon launches car store used car sites at 10 Morrisons and Homebase stores. So this is Pendragon is broadening the footprint of its sell your car and click and collect used car retail services with the opening of these 10 car store direct sites, which are pretty much pods that are dropped into car parks at Morrisons and Homebase. So you've actually seen some of these already, haven't you, Phil?
Yeah, a couple of them. There's one strategically, well, I say strategically placed. I don't know whether it's just by chance it's been placed there, but it's there's I think there's one in Rochdale that I had sight of that's fairly close to another competitor's retail showroom over there in Rochdale. But they do seem to be popping up here here, there, and everywhere. And I think, we talked about Pendragon and last week with Bill Berman's challenges around that bonus and pay structure from the AGM, but they are sticking to their strategy that they laid out, which we covered many podcasts ago, if you can remember that far back, Curtis, where Bill had laid out their strategic plans of growth, focusing on that used vehicle marketplace, and this is obviously that continual expansion of their car store division. So yeah, I think we'll probably expect to see more of these, I suspect, as it starts to continue in that marketplace.
Yeah, because what actually surprised me in this story was the relatively low numbers, because we're just talking about 10 sites, and this follows, according to the coverage, a trialing of these sites back in 2020. So I would have expected to have seen more of a national rollout, following that trial, and maybe that is the work that is in progress. Maybe we'll see more over the coming months.
Yeah, it could be, and I mean, it'd be interesting to sort of map it out in relation to their dealership representation and whether it is filling sort of coverage patches across the network, and how they sort of align in those pods with the dealerships, and where the dealership might handle some of it and the pods handle the areas that they're not represented in. So it'll be interesting with this, because it is happening with a few groups, isn't it? It's not just car stores that have done this. There's a few other operators doing kind of similar. So maybe it'll show in time how successful this is.
You're listening to All the Chatter That Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So we're heading over to AM Online now, and we talked obviously recently with Arnold Clark walking away from the Ford and Japanese OEM Toyota earlier this year as they focus on other areas of the business. But there is a headline here that Trust Ford signals Scotland shift with Aberdeen car dealership application. So although Scotland was dominated with Arnold Clark's there as Ford, but it looks like the first move with Trust Ford now getting into there, and I suspect this Aberdeen site won't be the last one, I suspect, as they move into that Scottish territory.
Yeah, it's an interesting one, this, isn't it? Because with Arnold Clark, as you say, pulling out of Ford, it does leave a vacuum in Scotland in terms of Ford representation. So if Trust Ford do actually go ahead with building a site in Aberdeen, this could be their foot in the door for Scotland, because as it stands at the moment, they don't operate any sites in Scotland, but they do have a Parts Plus operation in Scotland. So strategically, this does make an awful lot of sense. And the story actually comes from, AM looks as though they spotted it in Scottish Construction Now. So well spotted there, because it's a local application story. And AM have dug a little deeper and found that it relates to Trust Ford.
Yeah, and they're talking about there that is it Knight Property Group have demolished 20 multi-let units to make way for the new development. So stating that the properties were dilapidated and outdated and not fit for purpose there. So again, great work there, Tom, with finding that one and seeing that, because I think, as we've said there is that open point up in Scotland, and after Arnold Clark's did leave the territory. So, as you said, Curtis, it feels right with their Parts Plus division being up there that they need dealer representation that they may not have been able to get previously whilst Arnold Clark's were there.
Yeah, definitely. And final headline this week is from Reuters, and the headline there is Hyundai Kia raided over suspected defeat devices in Germany. Shares plunge. So just when you and I thought that we'd moved on from Dieselgate, it's rearing its ugly little head again, isn't it?
Yeah, it is. Yeah, unfortunately, it is an interesting story you found here, Curtis, at Reuters. There, that it, particularly in those two brands with the Hyundai and Kia, which are kind of, their partner brands there represented. So, yeah, it's quite an interesting one. This one saying that the devices are mechanisms or software that can change vehicle emission levels, leading to disputes over whether manufacturer use them to mask the true pollution levels of their vehicles. And as we know, VW admitted in 2015 to using software to cheat US emission tests on the diesel engines. And if you missed that one, then where were you? Because I think that one it lasted many years. That one, didn't it? Hashtag
Yeah,
Dieselgate. But there is a few interesting spokesperson people comments in here, isn't there,
yeah.
from both Hyundai and an analyst.
Yeah, it's a curious one, this, because potentially, according to the Reuters story, 210,000 vehicles, diesel vehicles, could actually be affected. And Hyundai and Kia, and yeah, I know this from personal experience, have a huge presence in Germany. Indeed, Kia has got a European base in Frankfurt, next to the Frankfurt Messe, where the Frankfurt Motor Show used to be held. And so the story says that some of these premises in Germany and Luxembourg have actually been searched by authorities. But there's Hyundai Motor Group, so the parent company, has confirmed that the raids have taken place and they are working with authorities. But you're right, there's an interesting comment from an analyst, South Korean analyst Kim Jun-sung, who says that no issues were found on all the Hyundai and Kia diesel models sold in Europe because they were investigated in the mid 2010s for this potential manipulation of emissions. So it's going to be interesting to see what this actually relates to, if that is actually the case.
Yeah, exactly. I mean, like you said, we've just put a bit of a perspective on the time period that this has all been going on, referring back to 2010 there, which was kind of that sort of Dieselgate period, wasn't it, as well, still
Yes.
going on there. But again, I think that, one, it sets that question of, if there is stuff still taking place in the market, and two, it's Reuters do obviously share that it has hit their shares, with Hyundai Motors and Kia plunging 5% and 4% respectively when this came out into the market. So it does hit the OEM in different ways, doesn't it?
It does indeed, and we have actually seen, and I was talking to someone just a couple of days ago about the way that Volkswagen have emerged from the whole Dieselgate controversy, because as a brand they've very much moved on. They've put some distance in there, and it's no longer a talking point, is it? As far as Volkswagen goes, they're going now from strength to strength. So this is something that Hyundai and Kia will be pleased to just resolve as quickly as possible, I'm sure.
Yeah, these kind of things do seem to sort of just hit the headlines every now and again, don't they, from various manufacturers? But let's hope it goes away fairly swiftly, because I think on the road to recovery that we've been talking about all the way through this podcast, it's the last thing that you need at the minute in terms of that confidence in a brand.
Yeah, definitely. And now, to round off this week's show, here's our full interview recorded just a couple of days ago with Virtue CEO Robert Forrester.
We're delighted to welcome back to the podcast Robert Forrester, CEO of Virtue Motors. Hello, Robert, and good to have you back on.
Pleasure. Thank you very much for inviting me.
Yeah, good to have you on, Robert. Now, anyone who heard last weekend's podcast will know we talked about the media coverage of Virtue's AGM and a report by car dealer that Andy Goss nearly lost his re-election as chairman following what was described as a shareholder rebellion. Now, the following day, car dealer ran an update on the story, reporting the votes cast against Andy Goss and the dividend were actually the result of a clerical error. So, Robert, can you shed some light on what happened at the AGM?
Yeah, I mean, well, the first thing, Curtis, is he didn't nearly lose. He got over 80% of the vote. And last time I looked at elections, 51's enough, as we know, don't we? So he didn't nearly lose. But, I mean, we did sort of sit there when the proxy votes were read out, and proxy votes are people who vote in advance. And obviously, the major shareholders are big institutions, and they vote. And we sat there looking at each other, thinking, "Well, this is a bizarre turn of events." Because one, Karen Anderson, our chief financial officer, got 99.9%, on her re-election, and then I think Andy got something like 82, and then we had 82% for approval of dividends. Well, to be honest with you, it's a bit like voting against a pay rise for shareholders, isn't it? Well, I would
Exactly,
vote against a dividend. So we thought, okay, well, that's fair enough. So we thought, well, we should identify, what the score was. And obviously it was reported very factually that, clearly there was 17% or 18% or something against. And as it happened, and I've been a PLC director for 22 years, and I've never known this situation before. That actually one of our shareholders, that what they do, the shareholders, they instruct an agent to vote on their behalf. And the instruction was made, but a clerical error was made by the agent. Now, you can't redo the vote. The vote was the vote, but clearly, from a board's perspective, and Carl Deagley actually did put another article out clarifying the matter. It was a clerical error, and I've never known anything quite like that. But I suppose Mr. Goss is somewhat gratified by the fact that he didn't nearly lose the vote. But still, I think it was a quizzical moment, and one that we shouldn't worry about too much. And the shareholder in question is, very supportive of what we're doing, actually, and certainly had no intention of voting against the chairman's re-election or indeed the dividend.
Yeah, and as you say, the vote can't actually be recast, can it? That's it.
No, I clearly not. I mean, that's just not. Actually, it doesn't matter anyway. You got 82% is 82%. But it's an interesting thing that I've never come across before, and there we are. There we are, a new event, and made the AGM slightly more exciting.
I was going to be a bit say there was Trump or the Russians involved, but we better not go there.
No, it was a lot more banal than that. If I'm honest, it was a lot more banal. We did have a shareholder actually turn up, a very nice gentleman, asked one question, and we showed him round the place, and I got a very nice letter from him this morning saying how much he'd enjoyed himself. So. There we are.
So, obviously, cheers for clearing that up. I know we had a bit of a communication on the Twitter, because I think when you listen to the podcast, me and Curtis kind of didn't know what to say about the story, because it just didn't, it was kind of a question. Is this right, or was it right, kind of thing. So, but moving on from that and thinking about, obviously, you also shared your trading updates, which I know were till the end of February, and they came out in May, and obviously you shared those at the AGM, and I don't think we've really spoke about your trading updates, but what are your main points in terms of your trading updates up until
the trading update was really for the month of May, because when we did our announcement in May, we were going up to the end of April, so at the AGM we updated for the month of May, and actually other PLCs have also reported subsequently to us actually doing that trading update. So, what we're seeing is probably an expectation that new car supply will slowly come back. So I think we're seeing some visibility, or at least talk of it, which is gratifying. I think we're still seeing margins strong in new and used cars. I think we've seen, clearly we're now in months, aren't we, May, June, where last year was the most riotous used car market in the history since the motor vehicle was invented. So we're clearly going to be behind that in terms of volume and probably margin. I think that's fully expected. The most powerful comparatives now. So I think we made a very strong start to the financial year, but you've got to be cautious a little bit, I think, about the outlook. Uncertainty over supply remains. Still think used cars will be tight, actually, from a supply standpoint, and that'll keep values declining, but hopefully moderately. But the whole people call it the cost of living crisis. I call it the cost of lockdown crisis because that's what created it. Is going to hurt consumers, and I think we'll see slowdown in new car order take. I think we'll see used cars potentially also continuing to decline, certainly year on year. Whether it declines against 2019 is interesting or not. 2019 actually wasn't the best because of the Brexit shenanigans. So I think we are cautious in terms of the outlook. Happy with our expectations for the full year, but cost pressures and where the consumer is, I think, is going to be really fascinating over the next 6 to 12 months.
And do you think that's your main? I mean, obviously, you've built up an order bank of new cars that, as you say,
I've
starting
got a fantastic order bank.
through.
I mean, there's going to be a real funny period actually, whereby the SMMT registrations will be determined by how many cars come to the country.
Yes.
Not by demand. Demand's already built into the order bank. But I think we are starting to see softening of new car demand, as you'd expect in a more, with consumer confidence, really low, isn't it? And if you look at the indices. So we're going to see order banks eaten into. And we're going to see more normalization, I think, in terms of new cars, where we'll have to fight a bit harder, do more marketing, etc. And how all that balances out, we'll have to see. But I think the economic pressure will clearly have an impact.
And Robert, you mentioned about this gradual improvement in new car supplies. I just wonder if, what's your feeling at the moment in terms of when those supplies will start to improve and whether or not it's brand specific? Yeah, what do you actually see?
Well, it will be brand specific, but I think in generality, I think there are some green shoots where some manufacturers are now reporting full production. There's still challenges. Shipping, for example, from the Far East remains a major challenge, both in terms of cost and availability. I was with a manufacturer yesterday, and I remember pallets were an issue in the old days on trucks, weren't they? Always in the wrong place. I think we're there with shipping containers, always in the wrong blessed place, and probably ships. So I think there's still some challenges on supply. I don't think the Ukrainian situation helps us at all, and who knows where that's going directionally. So I think there's challenges, but I think the manufacturers are starting to see the end, or beginning of the end at least, in regards to semiconductors and things like that. I think they're getting more confident that they've got visibility of better times ahead. So I'm not saying that new cars are going to suddenly land in September even, but I think we can at least see that we may very well be through the worst, I think.
Yeah, and in terms of used car supply over the course of May, how did that look across the business?
Yeah, I mean, we're okay for used car supply, but if new cars are down, and new cars are down, aren't they, compared to, a 1.7 market's not a 2.6 market, is it?
Yeah.
There's no rental defleets to my knowledge. So, it's still tight. But with more subdued demand, that's okay, isn't it, really, if you think about it, because it means that we've got values that are holding up quite nicely.
And after sales, how's after sales performing? Because we've obviously, you're talking on terms of production and the challenges of obviously, in terms of distribution and the shipping and things like this. There's reports that that's having an impact on the aftermarket because it's, you're waiting for parts and aftermarket products to get across Europe into the UK. Is that? But at the same time, you've got people keeping cars because they're waiting for the new cars, or they can't afford a change of cars, so they're coming into the workshop for maintenance and servicing of their current vehicle.
Yeah, I think it's a complicated situation presently. We have definitely got parts dislocation issues, to which I would ascribe pretty well zero to Brexit, but I would say that, wouldn't I? But we do have back orders for parts. But to be honest with you, if you went to Germany, they'd have back orders for parts. If you went to the United States, they'd have back orders for parts. And therefore, to my knowledge, Germany hasn't exited the European Union.
Yeah, I think it's probably is it that it's more about the production of the parts, the availability of the material.
It's production and logistics. Yeah. So there's definite parts issues, patchy across manufacturers, but there's definitely, and my WIP levels in parts WIP have been the highest for, I can't ever remember it, because, you do a job, you've got 5/6 of the parts, but you can't finish it until you got the sixth one. So that's definitely an issue. I think we were obviously in a comparative period, aren't we, where, we are, 2 years out from the major lockdown, which reshaped the seasonality of service and MOT. That's potentially a factor currently. The decline of the 0 to 3 year vehicle park is marked, as we all know. Clearly impacts used cars, but actually also impacts warranty work. So the industry has seen a consistent decline in warranty work, which I think is part related. We are seeing a slight rise in recalls, which is helping a bit, but definitely warranties down. And obviously internal work in service is subdued if volumes are generally down. New car PDI. Used cars actually not too bad, because as the average age of the used cars we retail goes out, then it's fairly obvious you have more reconditioning work to do, and more parts actually required. So as the wear and tear increases, so I think it's pretty solid actually after sales. We've obviously all seen big increases in technicians' pay, which has a potential then to impact margin and labour gross profit percentages. But overall, we're happy with our service and particularly parts performance.
Now, last week, Robert, we mentioned how the trading update signed off with a line about Virtue continuing to evaluate and execute acquisition opportunities. Now, we know you can't share any specifics with us, but can you tell us how these opportunities are actually looking at the moment? Are there many dealer businesses actively looking for buyers, or are there any potential targets you're specifically interested in?
Yes to all the above, probably.
I thought you'd say that.
Yeah, there are a number of acquisitions that we're looking at and are making some progress on. They range from dealerships to digital businesses, actually, in line with our strategy. I don't think the shareholders will be any major surprises. Some will come quicker than others, I think. Yeah. What's the situation? The industry's just had the best financial year ever. There's a lot of uncertainty in the minds of people around what happens in an agency environment. What are the manufacturers doing with regards to reshaping market areas and reducing the number of partners and reducing the number of outlet points? And time always plays a part, doesn't it? Yeah. Really? As I think you've probably seen from Twitter, I'm doing a lot of work with a behavioural scientist lately.
Yes.
And he said something really interesting, which is people make great life decisions when they have a 9 at the end of their age.
Yes.
Which really struck me, actually, because we buy a lot of business from people who are 60 and always have done. And actually, I think Peter Vardy sold Reg Vardy when he was 60, I think, from memory. So, there's always a stream of acquisitions coming on. I think there's probably more acquisitions than certainly has been the last 2 or 3 years, because timing, profitability, manufacturer actions. I think a lot of manufacturers are actively on the pitch. Yeah. And we are quite busy, not actually just with acquisitions, but franchising opportunities, all kinds of actions, as akin to the Toyota work we've been doing in Scotland, which we discussed last time. Yeah, I was on the show. So yes, we are busy, and I've got quite a bit of time set aside to try and work on things.
There's a lot happening, isn't there? A lot happening.
Yes.
And just quickly, I know we were talking before the show about Mark. You've been doing amongst everything else that you've just talked about, but you've been doing a bit of a deep dive into the sort of the marketing and activities. Is there anything you want to sort of share? So bearing in mind there might be competitors listening as well, but in terms of some of the stuff that you've been looking at.
I tend not to worry about them. Really. We only have one competitor. I'm actually finished day one. I've done day one of 2 days. I do this sort of once every 4 months, where we get each element of our marketing team in to give an update on where they are, what their priorities are, what's going well, what's not going well. Key thoughts out of today. the marketing side regards to sports sponsorships and motorsport sponsorships, I think, is really aiding the business. I saw an analysis today. We've got more social media followers in pretty well every channel than all our competition, if you add everything up, with the exception actually of LinkedIn. There are two of our competitors who actually have more LinkedIn followers than us, which I thought was interesting. So social media reach is really crucial. One of our dealerships in the last 6 months, one dealership on Facebook has reached over 88,000 people in 6 months, which I think is exceptional.
It's a lot, isn't it? That's a big reach.
It's a big reach.
Yeah.
And there's a lot of work gone into that by the dealership and by the central team. And things like last weekend, we were at the Festival of Speed at Goodwood with a stand, Brandy, Bristol Street Motors, quite a big investment with our W Series colleagues and drivers, with the BTCC car and drivers. And there was a lot of social media activation. And up to 3 o'clock today, we've reached 1.5 million people through Goodwood in less than a week. So I think that element is going well, and it helps build brands, which we think is important. And then the other thing is we've done a lot of work on making sure that we're strong on electric vehicles on the web. And I think there's still a lot to do, but we've made a lot of progress with range and all this good stuff that was absent, which always made me.
And where are your thoughts on EV? I know we spoke years ago, I think, when we were talking about obviously that transition towards EV and how quickly it would be, etc. I mean, are you, whether it's to do with production issues and OEM focus, or whether it's the cost of living or the fuel pump prices, what, as a business, where are you looking like now with EV and the shift to EV? You think
there is a shift. But it's not necessarily a consumer-led shift, is it? Because the government's dictated they've got to do it 100% by 2030. And Auto Trader have sort of got a graph of their expected, the glide path up to that, and I wouldn't necessarily disagree with it. And I think we're outperforming in terms of market share. I think we've got to be very mindful of which manufacturers we're with, because you've got to get to that number by 2030. However, and I don't like governments, to be honest with you. I certainly don't like governments that do a lot. It's tricky, isn't it? Because the Prime Minister standing up and says he's going net zero and we're going to do this by 2030 is all well and good. But is it reality? And we're in a situation where some really fascinating things are going to change. Can the British public afford electric vehicles? To what extent does mass production of electric vehicles lead to a reduction in the cost and therefore make them more affordable? Where are the affordable electric vehicles coming from? Which manufacturers will make affordable electric vehicles at a time when the British public are actually getting poorer at some rate of knots, to my mind? And what's that impact on after sales? I was at a talk this week, a fascinating talk, where the average age of an electric vehicle write-off in the UK currently is 0 years, because the cost of the batteries are a hell of a proportion of the overall car, and therefore if you've got a problem, you need to replace the battery, you're into real trouble. So insurance costs might go up, though accident rates should come down with ADAS and things like that. So I think we're in a period of massive change, because I don't really think we've ever seen a switch of this magnitude since we moved from horse and cart to the motor car. Yeah. And I think horse and cart were knocking about for quite a while.
Next to the motor
cart. So I wasn't around at the time, believe it or not. But
they're still out, depending where you live, Robert.
Yeah, that's true enough. So I do think the industry has got quite a hard job to do, because we've been told by the government we've got to do it without the government really understanding what that meant. Reduction of the subsidy. The government can reduce the subsidy, because actually they've just told us that it's illegal to sell anything else in 2030. Yeah. So, their view will be, well, you've got to do it, so get on with it.
And that's before you question that we're 5 years ahead of our European partner.
Oh, and actually, there was a very interesting. I nearly tweeted it actually, but I thought somebody accused me of being anti-European, and I wouldn't want to be accused of being anti-European. But there was a very interesting piece of news yesterday. I think it was in Automotive News, where the Poles and the Czechs are going to get together, government-wise, to try and reverse the 2035 deadline on EVs in Europe.
Yeah.
And there's going to be a shed load of backlash here because, there is a proposition that unless we can get affordable, cheap EVs through the system, then the average man on the street might struggle.
Yeah. Well, 80% of the cars in Portugal are diesel because they have taxation incentives to drive diesel.
Yes.
So you've got a relatively poor country that you need to transition 80% from diesel into EV by 2035, which is...
And we're one of the richest countries in Europe, but we're getting poorer,
yeah.
With the 10% inflation rate. So I think there are a lot of challenges, and I don't want to be negative about it. We have some phenomenally very good electric vehicle new cars. We do. With good range, and they look good and they drive well. So there is customer demand for it. We've seen a massive 700% increase in website visits to the electric vehicle new car pages year on year. So there is increasing customer awareness of it and indeed demand. But I just wonder whether we're in the easy bit, i.e. we're selling electric vehicles to those who can afford it. What happens when we get into harder territory of having to sell them to people who might not be able to afford it?
Yeah.
And then how the used car market goes, electric vehicles, I remain to see. How does it all work? What's the depreciation on electric vehicles? How does the battery go over time? Questions I don't know.
Yeah, I think a lot of the market are trying to still work that out, aren't they? But
well, the answer is that we won't know till it happens, will we?
Yeah. No,
we could certainly do. We could certainly do with more electric vehicles in used car stock because I think I've got about 150, and they, according to Auto Trader, they shift at twice as fast as petrol and diesel cars. So having them on board would be quite good news, wouldn't it? And certainly searches for electric vehicles and used car stocks going up through the roof.
Yeah,
we're definitely seeing that. So I don't think we should be overly negative. I just worry about governments and unforeseen consequences and competence, really. And then there's, what's the impact of all that in getting it all through the system?
There's maybe a bit of time behind it. There's still a few years yet for government change, isn't there, ahead of the 2030. But
well, they might. What in terms of the government changing or the government changing its mind?
Both.
Definitely both.
Everyone you speak to, I mean, the debate in the last sort of weeks, 10 days is about, Europe trying to push back to 2030, 2040. It's been now confirmed that it's going to stay at 2035, but it does question why we're 5 years ahead in the UK.
Well, if there was a referendum in the United Kingdom on the subject, who'd win? Put it to the vote of the electorate, what would the result be?
Yeah.
And that's a fascinating question, isn't it, really?
Maybe one to start, Robert. Anyway.
The petition starts here, Robert. Well, look, Robert, many thanks for joining us on the podcast today and putting some context behind those media reports, and also for sharing your views on current trading, EVs, acquisitions, and lots more. It's great to have you back on the show, especially as we know you're a regular listener. So do come back again soon, and many thanks for joining us.
Yeah, thanks,
absolute
Robert.
Pleasure. Thank you for having me.
Thanks, Robert, as always. Well, as we said right at the start of the show, you wouldn't be disappointed with that interview. We covered everything from the AGM that they held recently and that sort of re-election that hit the headlines, all the way through to Robert's views on marketing, because he's currently in the middle of reviewing their marketing strategies and what's happening, and very open and honest conversation there, because we even went into the world of EV, didn't we? And when he talks about a 700% increase in EV inquiries and whether that's down to accessibility to EV, pump prices, etc., but very open and honest. And we did, as we said earlier, we did touch on politics a little bit there, didn't we?
Just a little, yeah. And also, he had some interesting things to say about acquisitions. So, and he made it quite clear that there are acquisitions being considered at the moment. That there are groups and standalones, and he intimated that online businesses as well. All up for consideration. And it's probably worth adding, Phil, that this was. Initially, when we set up the interview, it was going to be a 5 or 10 minute chat, wasn't it?
Yes, it was going to be.
But it did expand.
It was on form, very relaxed and very chatty. And I said to Robert afterwards, we could have done that for hours. We could have carried on, but we all had obviously other things to get on with. But yeah, very fascinating. And like I say, great interview there with Robert. And I say it's on earlier on in the week as a standalone, or that was extremely interesting. So I think that's it today, Curtis. Like I said right at the start, that was a snippet from Darren's interview there. Do listen to the full episode. Very insightful. Again, give you some sort of confidence into what's happening in the market, a little bit of sort of, that not too much panic taking place, but a little bit of insight there in the strength of EVs, interestingly enough, tying into the Robert interview there that, Darren citing some of the EV increases in values, why some of the SUV, MPV products and diesel products is obviously easing a little bit more than others. So a great interview there with Darren and some great headlines, and we'll keep an eye on this Hyundai and Kia one as that starts to uncover itself in the whole Dieselgate returns hashtag. But we'll keep an eye on that one for you.
Yeah, it's been a busy old week, Phil, but that really is all for now. So you've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chatter that matters. We're back again next week. Until then, it's goodbye from me.
And it's goodbye from him.